And so bears capitulate as Bitcoin bulls push the price through $25,000, now sitting shy of 27. Yes, we're sitting here at 26.7 thousand here on Bitcoin, breaking many critical patterns here to the bullish direction. More importantly, we've got a major shift in the global central banking dynamic. There has been a major fundamental shift which is changing the outlook here for Bitcoin. In this video, we're going to break down the key levels in the charts. I'm going to give you price targets on where I think this latest move can go. Plus, is this sustainable? Is this bear market officially over? Have we finally capitulated the bears? And are we ready to head in the upward direction? As we can see here on the hourly, Bitcoin breaking out from a descending triangle, which is normally a bearish pattern, to the upside. This shows the bullish momentum here on Bitcoin, reaches its price target at the top of the wedge, which would be 26.5k, and continuing onwards from here. This is very important. This yellow line here, this 25,000 level mark, has been a huge resistance for us, dating all the way back to August. Yes, this period here in August of 2022. Now that we've broken it, we've spoken a lot about the fact that there's a big gap to fill. When we fell originally, we fell from levels such as 31,000 with a huge gap breaking us all the way down. Now we look to see if Bitcoin can start to fill this gap. If we switch onto this chart, you can see we are now officially coming out of our ascending broadening wedge, which is absolutely fantastic. Remember, what we're looking for here is normally when you have a bullish break of an ascending wedge, you get something like this, and then off it goes. It just starts breaking out of the wedge in an explosive parabolic move to the upside. That is what we're looking for here on Bitcoin. If I show you the other patterns we were watching this channel, this upward channel. So we had this double top pattern, we broke to the downside, we saw that play out perfectly, bounced from the bottom, worked our way to the top, and now we're getting a breakout. Can we break? Can we get the retest? And can we then head on higher? Do not be surprised to see if we get a retest. If we need to come back down, don't just think it's just going to be green, green, green all the way up. No, it's going to have a bit of green. Let's come back down, let's retest, and let's work our way up. But what is important is today, this daily candle printing here, we need it to close above 25,000. We don't want to now lose $2,000 again intraday and fall back down. I think that's very unlikely, but who knows? This is crypto. So if you are trading this, wait for the candle confirmation. And ideally, you do want to wait for the next candle, which is tomorrow's daily candle, to open up green as well. That would be a lovely entry from a textbook perspective. Again, if you want to learn trading, if you want to learn TA, ijaz.uk/TA is my free TA course. Head and shoulders patterns, these types of channels you're learning, Fibonacci retracements, EMA ribbons, VPVR, ascending wedge, broadening wedge, divergences. It's all in there for free. Over 10 years of traditional finance experience. I did not have a course where I could just go watch one course from the comfort of my bedroom and just learn everything. I wish that existed, guys. Take advantage of it. I'm going to take it off the market. I'm not going to leave it for free forever. And I'm going to be launching different courses. So if you don't stay up to date, you're going to miss the first set of lectures. Really important here that we do get that confirmation, a retest, and keep breaking to the upside of this move. Again, how do you measure this kind of a move? Well, if you look at the channel here, you want to take the length of the channel, just doing this very rudimentally here for you guys to give you the idea, and we apply this to the top. This brings you up to that 33,000. And again, why is that important? Because we know that that's where the resistance sits, right? This is where the level sits here, where we have a bunch of resistance level here where we want to work up into this area. So that's what we're looking for. Is this gap fell so quickly to the downside, so equally you want to fill it quite nicely to the upside as well. That's what we're looking for here on this latest move on Bitcoin. If we're to look at this other chart as well, you can see on our Fibonacci lines, we're getting to our 0.786 line, which is a very significant line. Again, we want to break above it, we want to retest, and we want to work towards our golden pocket here. That's going to be a very interesting move for us to start playing through. Another important chart to look at, probably the one I'm most excited about right now, is this inverse head and shoulders pattern, which is forming on Bitcoin. Remember, this is a very important reversal pattern formation. If you haven't watched some of my videos, again on the TA course, there's a whole section on reversal patterns. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on SKILLSHARE. For those who aren't familiar, SKILLSHARE is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days if you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. And this is the reversal pattern we've been forming here to get out of this bear market. This right here started forming on June 2022. June 2022, we've been forming this huge inverse head and shoulders pattern, and finally we're getting the breakout here from the neckline. Very important that we get this breakout like we're getting. I want to see this candle close. Feel free to come back, get a retest of the neckline, and then bounce with vengeance. That is what I'm looking for a clean break of this head and shoulders pattern. And again, what would your price target be? Well, if you take the move here from the top here of the neckline down to the most extreme point of the head, apply it to the point of breakout, and you get a price target up at 35,000. Again, a nice price target, but I do expect to see some resistance around 31 to 32 given this level here. So we'll see that's how that plays out as well for the head and shoulders pattern. But one thing is for sure, we are breaking a very, very important level here on Bitcoin. If I zoom out to here and bring out the weekly chart. Now, the other thing I want to show you is the VPVR. If we take a look at this, we've been worried about this huge cluster of volume, which is pretty much where we've been trading ever since June of 2022. So for 8-9 months, we've been in this range, which is characterized by huge volume here. Very hard to break key resistances, and we've seen that. It's been very stop-start. We've had all our macro issues on top of that, and we've been struggling. Now we finally got a nice clean breakthrough again. I want to see the close, but it's a nice clean breakthrough on this weekly candle, taking us through this level, and now we become thinly traded. Look at these candles here. This gap becomes far easier to fill up towards 30,000. Then you'll see some resistance at 30. So really excited to see how that plays out. More interestingly as well is, what if we take a look at our EMA ribbon? What do you guys notice? This is beautiful. This brings a smile to my face, because for the longest period of time, even though I enjoyed this relief rally, I was in the market. I wasn't like some of these perma bears who were like, no, I'm not trusting it. But one thing I did say throughout this was we are in a bear market rally. And I sustained that from 15,500 all the way through this excitement up towards, even when we moved to 25,200. I kept saying this is a bear market rally. Watch out for the bears, watch out for the bears. And you saw the bears showed good glimpses and cameos. They had 2 strong weeks here. They had 3 strong weeks here, even sending us back here as low as 19,700. So the bears did put up a fight, as I expected, at that 25,000 level mark, but we created our higher lows. We spoke about this huge doji candle and how it shows us that we could be set for reversal. Again, you would have learned this doji candle from the TA course, okay? So you would have picked up on that, and you would have recognized that doji candle along with us, and you would have recognized, the bears are exhausted. We should be able to step in now. This could be quite exciting. And we've gone ahead and done that, mainly with the help of the Asian markets, but I'm going to explain why the fundamentals have helped as well. So this is huge here. This now takes us, if we get this weekly candle close above, and it's good volume, it's better than the previous week's volume, which is good. I would want more volume coming in. We still have 2 days for more volume to come in, so that's fine as well. I want to see this close on Sunday night above this EMA ribbon. We cannot lose it over the next couple of days and come back into our EMA ribbon. That will be a disaster. We do not want that. We're going to close above our weekly EMA ribbon. We're going to open up next week on Monday above as well, heading into our FOMC meeting. Speaking of the FOMC meeting, markets are still expecting 25 basis points. Remember, the ECB, despite the whole Credit Suisse issue, I keep saying Credit Suisse issue, they said that they're going to come out and do 50 basis points. So they did their 50 basis points yesterday, despite what's going on. That gives us a clue that they're not too worried about what's going on. They must have some data on the back end say, yep, Credit Suisse is having their issue. They're going to take the backing of $50 billion or whatever they used from the loan facility, but we're good. There's no systemic issue going on right now. That's what they're saying by doing 50 basis points. If they're worried, you'd argue that they do 25 basis points or a pause. In a similar manner, I'm expecting the Fed to come out and do another 25 basis points with the plan of pausing at the next one, which is pretty much what the market is pricing in right now. But here is the fundamental shift. This is the rate hike we've had. This is the rate hike cycle we've had, the steepest we've had in 40 years. We've covered that off numerous times. This was the printing we did during the pandemic. Print. Well, I say we, but it's the Fed. They kept printing. Look at this point where you get to an apex here. They then decide, from this point onwards, that we're going to start reducing the balance sheet, okay? So no more quantitative easing. We're going to go to quantitative tightening, which is letting the assets roll off of the balance sheet, okay? So we're hoovering money up from the economy versus printing it. When you're hoovering money from the economy, Bitcoin does not like that. Bitcoin is a function of liquidity. When there's more liquidity in the market, risk on assets, such as stocks, such as the NASDAQ, such as Bitcoin, tend to do a lot better when risk is on. Well, guess what? They started their quantitative tightening. They increased interest rates. They started rolling off assets from their balance sheet. But it's quite a feeble attempt. Look at that. They came down. And what have you just seen, guys? What have you just seen that they're doing here? Let's zoom in. I'm going to zoom in so you guys can see it. Just pop me out the way. Look at that. Look at that. They started printing. This brings a smile to my face because this shows you that the US cannot help themselves. They've had to go ahead and stimulate again. 4 months of quantitative tightening unwound in 1 week, okay? This is huge. They've unwound that in 1 week here, printing. And this shows that their mindset is back to an accommodative stance, which is huge for Bitcoin. If I come back here into the chart, I want to show you that the dollar index has taken another blow this week. A down week here, getting rejected from the EMA ribbon. This is really important because the dollar index was trying to reclaim its weekly EMA ribbon. It wanted to do this. And the fact that we're showing some strength here, the fact that we can try send them back down is going to prove really, really important on this weekly time frame. On the daily time frame, you can see that we're managing to give them some pain and we're fighting them here, but we need to really send them down, and that way we can do so on the weekly chart, and that's going to be bullish for crypto. One of the reasons the dollar index has been holding up a little bit better over recent times is because, remember, it's measured against the euro, and the euro has been struggling because of the banking situation over there as well. But overall, this is good for Bitcoin. Fiat currencies are showing weakening, and Bitcoin is able to take advantage of that. If you look at the daily EMA ribbon here on Bitcoin, nice extension from this. Again, I wouldn't be chasing those candles. I'd be waiting for pullbacks. If you're still looking to DCA, always be patient. I know it never feels like the pullbacks come, but they do come. Wait for the EMA ribbon, wait for pullbacks. But overall, we're looking really nice, having broken that 25,000 mark and going straight towards that 27,000. All that's relevant for me now is a daily close above that 25,000 level. I do not want us to give this up and intraday and close back below this yellow line. That would be unacceptable here. We can't keep getting rejected. We're miles above it now. Please just close anywhere in between. I'm happy even if you give up some percentage over the rest of today and only finish today up, less than 6.5%, which we're at right now. That's absolutely fine. Just do not give it all up. And just to kind of hammer home the point here in terms of what the US government is doing, they basically backstopped these banks to the extent of $2 trillion, right? 200 banks potentially all facing the same issue that Silicon Valley Bank and Signature faced, in the fact that they bought US treasuries, which at maturity will be worth what they expected, but today they are not. And what the US government have basically said to Silicon Valley Bank and Signature is, we will buy your US treasury at $1, even though it might be worth, let's say, 95 cents. And what we'll do is we'll value it at $1 and loan you $1, so you can take that dollar and invest in other things which are going to give you better yield. So that's the situation we're in. The government's basically saying, we're going to buy your 95 cents government bonds at the value of $1, even though they're not worth $1. Absolutely are saying, we would never get away with this in crypto, but this is TradFi. They're never going to learn. They're going to keep doing the same thing. This rate hike has just proven that they cannot handle any tightening. They need a very accommodative government. Otherwise, the banking sector starts to creak. Just wanted to wrap up by touching upon the Arbitrum airdrop, which a lot of people have been asking me about. Again, we didn't cover this too much on this channel because I don't want to get into the nitty-gritty of every single token. If you want a separate video on this outside of the normal scheduled videos, then please let me know. I can do a deeper breakdown. But so far, we've got some of the tokenomics coming in. I was taking a glance at this, and you can see the investors are getting about 17.5%, the treasury 42%, team and the advisors 26.94%. This worries me a little bit, looking at the investors here, 17.5 and 26.9. It's quite a lot here, over 40% here, just for the investors and the team. That would concern me. If I also take a look at the things you had to do to get the airdrop, because some of you will be eligible for the airdrop, which comes out on March the 23rd. If you bridge to Arbitrum, if you had a transaction, let's say on Gains Network, if you provided any liquidity, if you did any of these things utilizing the ecosystem, then you're going to be eligible for an airdrop on March the 23rd. Now, for those who aren't familiar, this is a layer 2 scaling platform, again, comparable to something like Optimism. So if you're looking at Optimism, they're already sitting at a fully diluted market cap, which I think is bonkers, by the way, of $11 billion, keeping in mind that only 7% of their circulating supply is in effect. So they're sitting at 838 in market cap on just that 7% of circulating supply. So people are using this to kind of earmark what the valuation of Arbitrum could be. I think Arbitrum is going to come in at a silly valuation. For me, I am not buying it. I'm not looking to buy it. If you got airdropped some, fantastic. But I think a lot of people are going to get airdropped are going to be selling it. We saw a similar situation with Optimism as well. I said this is hugely overvalued when it came out. I still think it's overvalued. It's a good project, but it is overvalued. You can have a great project if the tokenomics stack up. I can't touch it, right? Something like Arbitrum, a lot of people are arguing, oh, it's got more adoption, more use cases than Optimism already. They've got more traction, so maybe it should command a higher value. And if it's more than $11.4 billion, that's going to be crazy. So be very careful. Don't chase the FOMO and the hype on that. Sit back, be patient. If you like the project, you want to hold it for many years, then be patient. Wait for pullbacks, wait for the down periods, and that's when you want to be accumulating something like this. Of course, their job is to create FOMO. Their job is to create hype and get you excited to buy these projects, but you've got to stay calm and collected. Now, if you're more interested in the Arbitrum ecosystem and what's going on in terms of airdrop, my good friend over on Twitter, Harim, go check him out. His page is here. He's done a really good thread on which protocols are expected to benefit. Because remember, a lot of the money is going to go to protocols as well. So you've got things like GMX, which is a perpetual DEX. You've got DPX, which is an options platform. You've got RDNT, which is a money market. So you can see this is the kind of platform that Arbitrum operates in. They want to be in the money market, DEX, perpetuals, option space. They've got some sort of casino going on here. Not my cup of tea. Perpy Finance. FCTR. So you can go through and have a read of all these. They've definitely got that's one of the reasons they've grown as Gains Network and all these kind of decentralized exchanges, which I think is a good narrative. I spoke about at the end of last year that decentralized trading and decentralized exchanges are going to be a big theme because we've been hitting the foot so many times with centralized exchanges. So that's one of the reasons Arbitrum's been able to move from strength to strength. Now, one key warning on Arbitrum, I think you're going to see a little bit of an outflow. I think if you think about it, you're incentivizing people to trade just because people want the airdrop. So there's a whole percentage of people who are just buying Arbitrum and trading on Gains Network, showing that the TVL is high just because they want the airdrop. So what I really want to look at is once the airdrop is done, where do the TVL levels settle in? Do people just leave? Or do you manage to retain those people? It's like opening a new burger shop and offering everybody a free burger on the first day. Everybody's going to come get a burger and you're going to show that you've got loads of customers. But how many of them actually come back when it actually means something? Do they actually like the user experience? Do they actually like interacting with Arbitrum and the protocols on there? That's where the proof is going to be in the pudding months after the airdrop. Hope you guys enjoyed this video. Exciting times as Bitcoin finally breaks through that $25,000 level mark.